turn on the news and we can't escape the situation in Israel and Ukraine. And definitely our hearts and prayers are going out to the people and families that are directly affected. But we also know that conflicts and wars like these are going to have a broader impact on the markets and our investments. So today we've got CNBC regular Degas Wright from Decatur Capital Management to discuss. So Decatur manages an international dividend portfolio on Echo Trade. So there's nobody better to break this topic than Degas. So let's jump in. Degas, I appreciate you being here. How you doing?
I'm doing fine, Jeff. Thank you for having me.
Yeah, absolutely. So let's kind of take a broader perspective on this right now. I mean, how do you typically look at? I mean, we've had the conflict in Ukraine going on for a year and a half now, and now we add in the war in Israel. What is your perspective on how you guys deal or look at these types of conflicts? Because again, like I mentioned, you guys have some U.S. based portfolios that you're managing for your clients, and then also on Echo Trade you have the international dividend portfolio. So obviously that's going to have maybe a greater impact, kind of these overseas wars than maybe on the U.S. markets. But how you guys look at these types of these conflicts and how you guys are managing your portfolio?
Yeah, so what way we look at it, Jeff, is that we see the global threat as one of the four drivers that we follow in markets. And so, as we talk about first of all, it's a human tragedy. That's what's happening in both Israel and the Hamas conflict, and also with Russia and Ukraine.
Yeah.
Just a terrible human tragedy going on. And so what we look at is that, how will that impact capital markets?
Yeah.
And so, just let's as we look at the Israel-Hamas conflict, what we're seeing is that initially there was very minimum impact on capital markets. Because it was thought that this conflict would stay contained. What we're seeing now, though, as the conflict continues and if it escalates, it could have a risk of contagion on the world economy. And so those are the things we're starting to look at now.
Yeah, because I mean, since the at least the Israeli war started, the markets have had a rebound. We kind of went into a correction in July, and now we've had a rebound. Even the international markets, there's a bit of a bull going there on some emerging markets, it looks like. So what's kind of is that due to the fact that people are kind of forecasting it being contained? But again, over the last few weeks, there's a lot of tension. I mean, I'm 42 in my lifetime. I don't know if there's been something like this with the Ukraine and Russia, and now Israel and the Middle East kind of in turmoil right now. So how is that getting? It seems like it's a little bit of a conflict. Like it's not quite as contained as we thought, but yet we're still kind of in a bit of a bounce from the correction initially, as well as in emerging markets.
Yeah. So if you look at the last month of capital markets, all the major markets are actually up.
Yeah.
And so that's, what we're seeing is that obviously we've had a positive month here in the U.S. We have a positive month in the the Japan markets. Even China has had a positive month. And then also Brazil. So you had, up markets in several different regions. And so it comes back to the capital markets right now are focused on this being a contained conflict. And that's what we're seeing in the markets right now.
Yeah. So they're really not pricing in too much, effect of these conflicts right now. It's just, maybe more optimism in terms of the central banks not tightening too much. That's having more of an effect on kind of this balance versus these wars and conflicts right now.
Well, if you look at it from that vantage point, we are seeing one aspect of the capital markets that's being impacted, and that's the energy sector.
Yeah.
We follow several global energy companies, and we have seen those companies actually from prior to the attacks on October 7th till now, they're up some 5 to 8% to their highs. And so we're seeing that this did impact the thoughts around the oil supply, and we're seeing that oil companies are doing well given the last, it's actually been a trend. And so what we're doing right now is that we've been actually increasing our exposure within the last several months, actually, to energy.
Gotcha. Yeah. So maybe a little bit of a hedge on the higher prices you're going to be paying at the tank. At least you can make a little bit of money back in your account. Absolutely.
Exactly,
Yeah.
exactly.
I mean, I was
And
going
that's
to
what
ask,
that's
go ahead.
yeah, that's one of the impacts of what's happening in the Middle East, and to a lesser extent, what's happening in Russia and Ukraine.
Yeah, exactly. I mean, so we kind of talked about this initially. Do you see, the Israeli Hamas conflict having, any impact here in the U.S. or is it, on kind of your international stocks? Does it have a greater impact there, at least kind of in the region, in the Europe and Middle East versus kind of the homegrown stocks here in the U.S.?
Yeah, we don't see the contagion impact in the U.S. as it would Europe or the Middle East. And
Yeah.
so, and part of that impact will be around the energy question. And so that's where we see the most impact of the conflict around energy.
Got it. And then last, I mean, so how do you guys, what should investors be looking at? Not investment advice, here, but from where your guys you're looking, what should investors look at? How do you guys look at this, and how can you navigate, these types of conflicts to be able to make sure that you're still positioning yourself for, even again, potentially if it does escalate and we get into a broader conflict, even get dragged in ourselves in the worst case scenario, then how can investors kind of protect themselves from that and also set themselves up for success?
Yeah, so what we look for and what we would advise investors to look at are three major drivers. And one, it would be look at earnings. What's
Yeah.
the expectation for earnings for the companies in your portfolio? That's critical. Also, you want to look at the central banks. What decisions are they making? The U.S.
Yeah.
Federal Reserve, for instance, we have actually paused recently. And as we look at the data that's coming out, and all central banks are doing the same thing. So you want to
Yeah.
look at how is the inflation impacting your holdings. Also, if you look at what's happening with a slowing economy, we may have credit contraction. And so how will that impact your portfolio? And then as we talked about, as we've been talking about, what is the impact on the global markets on your holdings? And so that's going to be what we will really focus and tell our investors to really focus on those four major drivers.
Yeah, got it. And you mentioned earlier, kind of energy being a benefactor of what's going on, and you guys are kind of, adding positions in that sector. Are there any areas that you're concerned about with what's going on overseas that you kind of maybe want to kind of take a step back, and there might be a little bit, higher risk than previously?
We don't really see any sectors that we are staying away from. Now, we are looking at some sectors that we're overweighting because we feel that this is a risk on environment.
Yeah.
Because, as we look at the central banks, as they pause, are we setting up a point in time somewhere a year from now in the 2024, 2025, that rates will start going in the other direction?
Yeah.
And so that could open up some opportunities. And so we're looking at a risk on strategy. And that obviously energy we talked about, overweight. Mm-hmm. We can also look at technology being overweight, and then also healthcare. So those are some areas that we see as opportunities to overweight in this market. And then also, so those are the type of things we're looking at now.
Got it. And by risk on, you mean you're able to add a little bit additional risk comparative to other times.
Exactly.
Perfect. Well, hey, Degas, I appreciate the time as always. Appreciate you taking some time. And investors, you got the DCM International Dividend Portfolio that's available on Echo Trade. You're basically able to copy guys like Degas in their portfolio. So appreciate the time, Degas.
Thank you, Jeff.